Hey guys, Crypto Sunday, and it's Green Week after, again, a bit of a sort of mini meltdown last week. Everyone's sort of getting a little bit concerned, I think, about rate cuts and sort of all sorts. September just being a bad month. I think it's kind of a self-fulfilling prophecy, really. No one really sort of buys in September because in the past, September's been a bad month. And then, yeah, it actually goes down because there are still sellers. So yeah, it's come back a little this week, up about just over 9%, or 29,000. So nice, and there is quite a bit of news. So yeah, let's have a look. So the CoinShares report we knew was going to be a little bit worse than last week. We saw 726 million in outflows. This is sort of obviously the ETFs, pretty much that dominates everything at the moment, and it's pretty much all Bitcoin. Although we've seen 98 million in Ethereum outflows. Not a lot going into the sort of BlackRock and Fidelity ones. It's pretty much zeros every day, which we'll have a look at. Bitcoin, 643 million in outflows, but some inflows elsewhere on the altcoins. The multi-asset fund still sort of carrying on. Solana, 6.2 million. That's pretty good. Short Bitcoin, obviously, with Bitcoin dropping, people were piling into short Bitcoin a little. Litecoin with a little, XRP with a little inflow. Little outflow out of Cardano. And yeah, by country, as you can see, it's sort of quite a lot from the US, a little bit from Canada, 27 million outflow, and a little from Sweden, but inflows into Germany, Switzerland, and of course Brazil, and a small one into Australia. But looking at the more recent news, so Bitcoin in the last week, it's sort of been a little bit choppy, sort of 28 million, 117, then a small outflow, 43, a small inflow of 39, and then 263 million inflow on the Friday. Interestingly, none into BlackRock. This was sort of Fidelity, Bitwise, and quite a bit through into ARK. So interesting. Inflow into GBTC as well. That's very unusual. Not even the cheap one, the expensive GBTC. So some people probably need their head examined. I think it's still at 1.5% fee, but whatever you want to do, I suppose. Looking at the Ethereum ones, so as you can say, you can hear the tumbleweed blowing through the Ethereum ETFs. Most days it's, you had Thursday absolutely nothing into any of the new ones, and 20 million outflow out of Grayscale. But then Friday, you had a small outflow out of Grayscale and a small inflow into BlackRock and Bitwise. Made it a 1.5 million inflow, which a lot of ETFs, people are sort of coming out, James Safer and Eric Balchunas sort of coming out saying, a few million in a day, most ETF providers would be fairly happy with. We kind of got sort of wide-eyed expectations from the Bitcoin ETFs, and it's sort of been pointed out that if the Bitcoin ETFs didn't exist, then the BlackRock and some of the others would be the most popular ETF launches this year. Obviously, you have got Grayscale outflows, some of that going into them. If we didn't have Grayscale, I very much doubt these numbers would be anywhere near sort of what they are, and especially on the Bitcoin ETFs, we've had sort of five-figure billions come out of the five-figure millions rather. Looking at Grayscale, yeah, 20 billion come out of Grayscale. So yeah, around a similar amount gone into BlackRock. So some of it's new money, but again, if we didn't have Grayscale, I doubt any of these numbers would be nearly as big. Bit of caution, I think, on the Bitcoin miners. Sort of have said for a while that I'm looking to get out of these end of next year, assuming we have a reasonable bull market. But I don't think I'm going to be getting back into them after that. Sort of in potential if things go normal, 2026 bear market. You sort of think maybe buy back into the miners in the bear market, but I think as we sort of move on, there's more people that sort of care a lot less about energy than your Riot platforms and people like that who are sort of trying to get the cheapest deals they can on the market for electric being their biggest cost. But you have people like energy companies, Japanese power giant TEPCO, for example. They have surplus energy basically, and they've decided to use some of that for Bitcoin mining. So yeah, they've acquired quite a lot. Russia, it seems, are doing the same. Did come out that Russia mined, I think it was 54,000 Bitcoin of last year's total. So yeah, that's quite interesting. I think it was about 16% of the total Bitcoin supply when I looked, or 16% of the total yearly production. So that's quite a lot, a sixth coming from Russia. And again, it's surplus energy. They're not really caring about the cost of energy. They just care about buying the machines. So you're never going to compete with that as a public miner for someone like Riot or CleanSpark. They're still having to buy the energy. So if you start getting people like Shell and ExxonMobil, for example, like burning their own flare gas to power sort of Bitcoin machines, if they just think that's a good way of generating a bit of extra cash from that, then you just can't compete with that. So that means hash rate could rocket up, quite a lot higher than it is now. Difficulty goes up, makes profit sort of worse for everyone. But those energy companies would be sort of the lowest cost producers by far, and they wouldn't really care too much about the difficulty. But it could put sort of higher cost miners on the public side out of business potentially, or at least make them less attractive. So yeah, I'm looking to sort of hopefully run up this bull market before any of this happens, get out of them, and maybe have a small allocation to just crypto itself going forward. But talking of the big US public companies, we have MicroStrategy in the market again, adding 18,300 Bitcoin. So they've been sort of doing smaller purchases recently, but selling 8 million company shares of new shares, dilution, but people seem happy with it. Investors happy to fund it, and shareholders sort of fairly happy with being diluted for the purchase of Bitcoin. And yeah, $1.1 billion worth of Bitcoin. They now hold 14.14 billion, but on a sort of market cap of 27 billion. I'm not sure I will sort of ever see the value here. Paying a premium because they can dilute more and buy more, but that isn't worth twice the value of Bitcoin that they hold. So yeah, good luck to them. It's taken Bitcoin off the market, obviously, and I would rather sort of public investment money was going into this sort of thing rather than funding expansion for the miners, because, as I say, it just sort of reduces profit for everyone, and all this does is, raise the price and puts it into a presumably long-term hodler account. I'm not sure I agree at all with this, phrasing of Bitcoin yield, a yield of 4.4%. I'm guessing that's quarter on quarter and 17% year to date. So they're saying they've got 17% more Bitcoin at the moment than at the beginning of the year, but it's not yield. They're not spending their cash flow on Bitcoin sort of at all, because from what I can see, they don't make any money at all. This all comes from diluting shares. So if they were to say yield per share to date, it's not a lot at all. But yes, 17% more Bitcoin per year to date because you've diluted people the value of that, basically. And we do have the SEC and the crypto industry sort of kicking and screaming their way towards some slightly more positive, maybe not regulation, but guidance, if you like. They've retracted some of the language that they initially used in the lawsuit against Binance. So they have retracted their long-standing characterization of cryptocurrencies as securities and intends to use more careful language in the future. So they sort of, in their lawsuit against Binance, they referred to Solana, Cardano, and Polygon as securities. They regret any confusion of just referring to them as securities, and they are now calling them crypto asset securities. So the crypto itself is not a security necessarily. It's the way that you sell it. So if I take that to mean if you buy it off Coinbase as Joe Blogs, you're buying it off someone else. That is then not a security. You're not expecting the person you bought it off to directly give you a profit or anything. You've just bought some tokens off them. But if the company or group behind the token sell it to institutions, then they are presumably expecting a return from the team, where the team are not selling them to the public direct. So it's the way you sell them can be sort of construed as a security, but essentially they do seem to be saying everyone trading it on Coinbase or peer-to-peer, Uniswap, and all that sort of thing is not a security. So that's quite a notable back down, I would say. We do have the CFTC sort of getting a little bit more aggressive towards crypto. It had seemed that the SEC was the sort of bad guy, if you like, and the CFTC was sort of a little bit more friendly. But yeah, they haven't been so much recently. And yes, one of their 5 commissioners, Summer Mersinger, has chastised the CFTC for engaging in regulation through enforcement, which the SEC had been, and calling for clearer guidance for crypto exchanges, even sort of making it clear how DeFi protocols could comply with future laws. So, yeah, here in the CFTC talking about DeFi is a little bit of an unusual development. Everyone loves a bit of Tether hate as well. It's just the sort of usual concerns about their reserves from the S&P Global Ratings Agency. Tether scored 4 out of 5 on its stability assessment, and that's descending. 5 is the worst, so 4 is the second worst rating they could get. Basically, it seems like because they haven't had an audit from one of the big 4 accounting firms, they have these attestations, and basically the only other thing is Cantor Fitzgerald sort of coming out and saying the reserves are all there, but that's not enough for the S&P Global, I guess. They are arguing that this lack of transparency is similar to how FTX essentially went under. I'm not sure I quite agree with that. We haven't sort of got any indication that they're spending, company funds or client funds on houses in the Bahamas and stuff. It does seem that they're just spending it on treasuries, on cash. Obviously, when rates go down, they'll be able to make less profit, but it does seem that it's still all there. They are working with law enforcement agencies as well, recovering, over 108 million since 2014. I suppose that isn't quite that much considering how much Tether is out there. But working with 145 law enforcement agencies. Didn't realise there was that many in the world. And in the UK, the High Court has ruled that Tether is property. First ever ruling under English law on the treatment and status of cryptocurrency. So something in the High Court, at least. We've had sort of guidance and bits and pieces from HMRC, but this is sort of the first thing it seems to go to the High Court. This also comes a day after a UK government bill is clarifying that NFTs, cryptocurrency, and even carbon credits, so nothing to do with crypto, are things and personal property under property laws. I love calling them things. And going back to FTX, we do have SBF filing an appeal for his felony conviction. He was sentenced to 25 years in prison. A lot of people said that was lenient, compared to the Bernie Madoff scandal. He died in prison, and FTX man SBF presumably won't. If he gets out, maybe sooner than that. I don't know whether it's an appeal, whether he's allowed parole before that, but we'll have to see whether that gets changed in the next sort of 25 years. But he is saying that basically they were solvent at the time, and it was just a liquidity issue, which I would say means you weren't really solvent. But also, I mean, however solvent they were, even if you use 1 cent of client funds for your own purposes, then that is illegal. And the law, maybe you wouldn't give him 25 years, but the law is the law, however much money it is. He's saying from day one, the prevailing narrative initially spun by lawyers was that he was guilty. He wasn't sort of presumed innocent, and then the case sort of going to prove him guilty. Basically saying everyone was already saying he was guilty. I think this was kind of known that he was guilty. It was sort of fairly public knowledge that he was spending client funds on houses in the Bahamas, and all manner of other things. He's sort of citing that they had billions of dollars in investments that they could have repaid their customers. I think that's just admitting the fact that you used client funds to invest in other things. Even if it was worth billions, it was supposed to sit on the exchange. And he's saying the jury never, or his lawyers at least, are saying the jury's trial never got to see that picture. I would say that is still being guilty. If you spent like their investment in this AI company that has sort of now become worth quite a bit, you were selling client assets and buying a stake in that company, which is illegal. So how he expects to get off this, I've no idea, but he is a little bit crazy. So looking at coins for the week, Bitcoin is sort of one of the outperformers actually, 10.3% up, looking pretty good. Solana 5.4% up, Ethereum 5.2%, Chainlink 9%, not too bad at all. XRP 10.96%. So I am sort of kind of considering going to sell that again. Power Ledger 7.6% up, Audius 1.5%, not quite so good. Outperformer of the week is Internet Computer 17%, Quant 10%, Gala is the only one down 1.72%, Polygon 5.5% up, Basic Attention Token 11%, and VeChain 7.7%. So this is all coming after a fairly red week last week, but yeah, good to see. So let's see what the FOMC brings next week, and see where we go from there. October and sort of Q4 coming. So leave your thoughts in comments below, and like and subscribe. See you soon.